A lot of difficult things have happened in the last couple of years, but in terms of transitioning to a green economy, there has been some opportunities too.
Yeah, well, I think there's a call to action. Clearly, the pandemic has focused people's minds. There's a general trend. You've seen the investors lead the charge, and companies are looking for, well, markets, they're looking for customers. And what we've seen is that the pandemic really brought that to the fore. Everyone in the room, you lead the charge by how you choose to spend your dollars. And how you choose to spend your dollars influences how, and our friends who are dialing in, of course, as well. Let's not ignore our people dialing in. It's the call to action. The call to action then translates into cheaper capital or access to capital. And what we've seen is it used to be a binary wash, have, don't have. And I think what's been interesting, what we've been seeing is not so much the activism investor, but the conversation that is now taking place. So rather than being a conversation in or out, it is, well, is there an ESG alpha? Can we do more? Let's have that conversation with investee companies and investors. And indeed, all of us as customers and through our pension funds, we're investors as well, we need to begin to call out and drive the right outcomes.
And how are you having those conversations? Because it is not a cheap pivot to the green economy. I mean, how is Bursa Malaysia helping a lot of Malaysian companies kind of transition here?
I think there's probably two elements, if I can, Juliette. I mean, we need to build capacity.
Yeah.
So one piece is regulatory. We start framing the conversation. We begin on a path, very much like my colleagues at SGX, we'll be moving to mandatory disclosure.
Yeah.
Now, I can move, or the team can move to mandatory disclosure. We can tell our PLCs this is where we're heading. But if you don't build capacity as well on that journey, then I think it's not going to succeed. And so we do two pieces. One is the regulatory piece. The other piece is building the capacity. There's always resources that's free to use versus sustain. And I think the key piece that when we look at it is, can we build a better ecosystem? In the Malaysian context, if you look at our leading index, FBM KLCI, banks are a large component of that. There will be mandatory disclosure of TCFD. Can banks play a role in providing mechanisms to facilitate that call to action?
When it comes to that regulatory piece, is Bursa Malaysia looking to change or tighten any of those, guidelines when it comes to reporting the ESG component?
I think previous speakers have talked about alphabet soup and so on. I think there's a subjective element and an objective element. What we're doing is we're very much focusing on the objective element. We're tightening it, if you like. We're raising the bar. What we've seen is very good compliance, but the quality of reporting is not quite where we want it. So we're going to begin to mandate, and we've run a public consultation piece. We're finalising the regulatory approvals, and we'll be announcing that we have expectations as to what will need to be disclosed by PLCs. Now, as that happens, we're looking for PLCs to then engage their supply chains and bring everyone along on that piece. So it's not just sectoral. So it is, if you like, it's step up on size of company. And then the other piece is we also don't want to, bearing in mind, and for most, it's a truism, small to medium enterprises represent 99% of all companies throughout the world. I don't think that's just a generalisation. I think that's true. And we want PLCs to lead that charge, Juliette, and actually help facilitate, if you like, they need to, your ESG, and part of that social piece is to bring that community on that journey.
Well, it brings me to one of the audience questions we have here too, because you were talking about the S part being, of course, sometimes overlooked. But this question here is that S and G seem to be just playing supporting roles for E. So at the end of the day, if it is all about the E, then S deserves more attention on its own. And sorry, I can't read that last part, but G supports both E and S. So your thoughts on that?
Juliette, your eyesight's better than mine.
I'm
struggling
a
little bit.
Can we make it bigger?
If we could, that'd be great. Anyway, no, seriously, we hear a lot about post-COP26.
Yeah.
Everything is about E.
Yeah.
And it all used to be about G. Actually, I'm all about S.
Okay.
Because if we get the S right, you've got to win hearts and minds. And you know, when people are struggling to put food on the table, environment is going to be a poor cousin, if I may.
Yeah.
And that's future state. So in addressing S and getting it right, we're going to make it easier for us to win the environment battle. And I'm afraid governance is just a given. You have to have it.
Yeah, yeah.
And so, I think there's a piece around environment, carbon emissions, GHG, biodiversity, but we also need to think about how we interact with society and what does it mean. Because a pivot to green is expensive. A pivot to green is expensive in terms of the need to invest in new solutions. But potentially, it's also very disruptive. And we're going to see society change. And therefore, we need to do the right investment in education and so on to facilitate that opportunity. Now, we're aspirational. We want to see that investment in people. So we have whole new economies happening. So it's not traditional economy versus new economy. It is a transition to the new economy.
When it comes to society changing, and this is something that is close to my heart, and I think a lot of women's hearts too, is more about gender diversity. Now, in Malaysia, there is a mandate that from September, large cap companies have to have at least one female on board. This was a mandate that came through last year, and then smaller cap companies, I believe, from June next year. How are you seeing that transition? Has it been an easy move for listed companies?
I think, well, there's a couple of elements. No, it hasn't been as easy as we would like it to be, and hence it's become mandated. Yeah. Because it used to be a step-up requirement. So now we need to encourage the pool, build capacity, and I think it is breaking through the glass ceiling, if I may, Juliette. Once there's I hate to admit it, there's a gender bias on the boards. If you just look, we've got approximately 30% compliance on the large PLCs. We need to get it better. Yeah. And a part of that is we've also changed the rules around the definition of independent non-executive director in Malaysia. So at the moment, we've made it a hard stop at 12 years, at 9 years. You need to seek approval for extension, secondary two-layer voting, and that's going to drive that change because we're not driving the cadre of eligible male directors down, but we're forcing that change and rejuvenation of boards and having that conversation while working with the 30% club, building that capacity, bringing people in and saying, well, here are some really good people that look at things differently from the way you look at it. So it's no longer a boys' club. Yeah.
And when it comes to the boys' club or the girls' club trying to fight that, I mean, you can't be what you can't see, and there are a lot of, I guess, networking events where men are not present. That needs to change too because you need to infiltrate. So how can somebody like you in your position and your role help be a mentor here?
What I endeavour to do is sponsor. Yeah. Race, creed, colour, we're not concerned. Yeah. We reach out to events, and what we try and do is actually introduce new people to new things, be it the nature of the business, traditional businesses are biased in one direction. We'll introduce new people to it. We'll have events. We curate events, very much like today is curated. We'll endeavour to create something to get the right outcome, if I may. Juliette.
All right, let's go to the questions that we are getting from the audience, and excuse my eyesight because it is a bit difficult to read some of these. But this one from Ken Hickson has got quite a few votes. So how is the built environment responsible for 40% of global emissions? Oh, here we go. Addressing embodied carbon and emissions energy use in construction and operation of buildings. Is that something you can answer?
Not really.
Not really. I don't know if that one could be for you.
This is a very specific
This might have been
question.
one for a previous audience. If we can just...
I think the key thing is when we're looking at global emissions, and I'll pivot the question if I may with apologies to Ken, is, in a Malaysian context, our biggest challenge is actually electricity and transportation. And I think the key thing is, as we look at new technologies, is how to fund it. Yeah. And what is the role of developed markets to support emerging markets? Now, that's a shameless plug, as I've taken Ken's question and moved it in the direction I want to go.
Well, let's get back to what we were talking about in terms of some of the supply chains too. And I guess the biggest piece and everything that we're talking about at the moment is inflation. Now, inflation perhaps in ASEAN not as dire as what you're seeing in the likes of the US and Europe, but we've seen food inflation. And you mentioned there, if you can't get dinner on the table, then the last thing you're worried about is, you know, the environment piece. But we saw food protectionism earlier in the year from Malaysia too. How do you see all that kind of playing out? And is that a concern that we should be having in ASEAN?
Now, I think, well, if I may, policy, we've seen the issues around palm oil. It's disruptive to market. We support free markets, if I may, Juliette. I think the key thing is, as we try and manage, we have a number of different... Inflation's been relatively benign in the Malaysian context, but there's also been a lot of conversation around subsidies and can it be afforded, and hence you end up with these policy decisions. I think what we need to do is, as we move forward, we have government is looking for more progressive subsidies. This will address your food disruption problems, but we do need to build better.
And how do we do that?
Well, in essence, one is to raise living standards. That's a statement everybody wants, but more importantly, I think subsidies need to be more progressive and be targeted rather than global. If they're a blanket subsidy, it's very inefficient and very expensive.
Very expensive indeed. All right. So we're looking here too at some of the other questions. I like this one. Are you looking at the same one as me, the third one across? ESG is mostly BS. We don't need to spell out what BS means. Nature doesn't care how we measure companies. Biodiversity protection is critical to human health, COVID a case in point. How can companies embed nature-based solutions faster?
Very good question. I sort of alluded to it. I think, well, biodiversity is the poor cousin to CO2. But they're equally important. Yeah. And I think so. It's about greenwashing. It is about transparency. But there's a need to have a conversation, Juliette, about what we want and what. And this gets back to all of us in the room and investors, making it very clear we're not just looking for a target. We're looking for outcomes. And what is the outcome we're seeking to achieve? So it's building that capacity. It's building understanding. So, I mean, so the conversation, ESG is mostly BS, okay? I think the reality is, I'm not going to challenge that conversation because we have alphabet soup. It is whatever you want it to be. And so we need to drive a common standard, we need to have a conversation, and we need to be serious about what we're doing with it. And so then you can, one would hope to change Raphael's mind a little bit because ESG is, biodiversity is a subset of ESG. And if you don't, unfortunately, you've got to make it pay. Yeah. And so it is not just enough, and this is perhaps wearing my sort of accountant's hat. If I cannot make a business case for it, and I'm making a long-term sustainable business case, we only have one world and we need to protect it. But in the same regard, biodiversity is a part of that.
Does that come back, though, to setting more targets then? I mean, we know that a lot of surveyed banks have this net zero target for 2050. That includes financed emissions. We talked there about some of the regulations that are needed. But how, I guess, do you put more of these in place so that it does become something that the boardroom is discussing right off the bat? Well,
at the moment, in the Malaysian context, you have to have that conversation already as a PLC. What we want is, now that that conversation is happening, and we have large construction players that are actually adopting ESG, they even, I won't mention the company involved, but they calculate carbon tax and actually charge each other as a conglomerate. Now, I think what we need to do is, in embedding it, again, it gets back to that I always come back to that theme. What is it society wants? And the private sector cannot replace government, but it can augment and support. Yeah. And so as government, for example, mandating board representation, can actually drive that change, and then the private sector will facilitate it.
I'm so sorry, I'm trying to look at both you and the board at the same time, but it is quite difficult to read some of these. So we've touched on those couple, and I'm not sure whether that one is specific to you.
No, we've done that. S&G supporting, we've done that. vote. Anonymous. We've
touched on that. Sorry. Can you just minimise it again? It's just hard to I'm trying to read them, but also at the same time.
First column.
I think we've kicked off a lot of those.
Second question.
Well, I might put on my Bloomberg hat and ask you a couple of questions that we wanted to hear, because we spoke to you on Bloomberg TV a couple of months ago, and you indicated that there's quite a lot of liquidity, demand for IPOs improving. Tell us what you're seeing in terms of the pipeline there.
Pipeline's strong.
Yeah.
We had an IPO yesterday. It's up. And it's thematic. Well, it's not thematic. It's what resonates with investors. But I mean, quite clearly, for those that you track average daily value, it has come off a bit. That's systemic. People are long on cash at the moment. But what they do is they're looking at IPOs as an opportunity. And as long as it resonates, we have good support. So the lead stream is very strong, Juliette, going forward. I'm very happy with that, and we're working very hard to bring those companies. Now, of course, headwind, inflation, does it impact their profitability? Is it still the right time to go to market? But indications are to our lead stream. I think when we chatted earlier in the year, I was talking about 37 to 40. I'm still confident. Okay.
And are you seeing strong demand across a range of sectors, or are there new companies coming to market?
Well, we've seen medical come up. Not your traditional, it's more of technology being applied to medical. We've also seen that pivot to green, if you like. A green technology is also well supported. But it's construction, the listings have got away, but post-listing, it's traded relatively flat. So I think people are looking for growth. I mean, so why do we invest? We invest for growth, we invest for dividend. And so does the company's pitch, its story resonate? How are they applying the capital? If those resonate and tick the boxes, you'll have interest. And what we're seeing is certain companies really resonate, particularly retail investors. I mean, you have your institutional investor as your bottom line, that they provide the bedrock. But if you like, we always talk about healthy speculation, but really what we want to see is retail investors engaged. And at the exchange, we've been working very hard to have conversations about companies, raise awareness, get people thinking about what they can do with it. Do you invest through a mutual fund? Do you invest through your pension plan? Or do you directly invest?
Yeah. We're also looking in terms of the overall global economy. We touched then on the inflation piece, but there are a lot of recessionary concerns. Here in Asia, as you said, it is a little bit different in terms of the overall climate. And we're very much focusing as well on the reopening theme, which is going to be a big boon to the likes of Malaysia. How, I guess, optimistic are you about where we'll be sitting in 12 months' time?
That's an imponderable. I wouldn't be the CEO of the exchange if I had a really good view on that. But I'm not going to dodge the question. I think the key piece when we're looking at is what's going to happen in this. Does the recession become self-fulfilling, Juliette? I mean,
well, that's another interesting point.
That's the theme.
Well, we've seen on our Bloomberg trackers as well, the amount of times recession has been mentioned in news articles spiking. Is, as to your point, is that then just self-fulfill these prophecies?
Yeah, I mean, do we increase interest rates to a point that we tackle inflation but stifle the economy?
Yeah.
Now, that's a big question. That's a macro question. That's beyond my pay grade. We deal with it. Now, what we're looking to do is you want to manage inflation. Then you have the impact if you don't increase your interest rate on your foreign exchange. Where are you sitting vis-a-vis your trading partners? Now, so recession is not good for the region, Juliette, because we are trading nations. And so it will impact us. So it is imported back, if you like. So it's not imported inflation, it'll be imported recession because, we are blessed with strong domestic consumption, but it is fed by trading.
Okay, let's go back to some of these other questions here. I think some of them are becoming a bit more relevant to you now. How do you manage your third-party risk management as part of your sustainable plan? That's from Yvonne, I think.
Oh yes, how do you manage a third-party risk management? It gets back to looking at, that piece when I was talking about TCFDs.
Yeah.
No, so when we look at it, and one is the Bursa lens. Bursa, we're in exchange. We can see who we're trading with and working through that piece. But we're looking for banks as they calculate their TCFDs is, I want to see a common, we would like to, we would like to see a common language. This is what we aspire to. With this common language, ideally we should have one model for calculating TCFD. So we mandate large corporations have to disclose. Banks are large corporations. Banks will then need to collect data. They have many touch points. You want that touch point to be common. So you want all the, we envisage a solution where customers self-populate the data set once, and then it goes to all the banks who need it. And it would also come to us at the exchange. If you have mandatory disclosure requirements, it will go through Bursa Link and then be available. This is our aspiration for it. And that's a conversation. So in managing third party, it's about facilitating it. Because, pardon me, the key to remember is it costs money. And for smaller corporations, for small partnerships, that's capital they probably don't have. So we have an obligation under the S to actually facilitate it.
But how do you, I guess, have that conversation that, yes, it costs money now, as we mentioned at the very beginning of this panel, this is something, the transition is costly, but down the track, this is going to pay off dividends?
Okay, the conversation, we focus on PLCs, if I may. FTSE for Good, we have roughly about 80 odd at the moment. We have 950 PLCs, so less than 10% are in that index. Now there's got different trading, it's got trading matrix on it as well. Doesn't mean it's only those companies that have good behaviour. Now, the pushback from the board is why? And we need to give the answer to that. And the answer to that is competitive advantage, access to market, and it is an investment in the future. So you may invest, for example, if you're a manufacturing concern, you would build capacity, you'd buy a machine. This is not fundamentally different. It's an intangible asset. And that investment allows you to differentiate yourself from your competitors. If you're an early adopter, take advantage of supply chain disruption, insert yourself in a green supply chain, build new markets. And that's a conversation that we're having domestically, not just with PLCs, but also with SMEs, that this is an opportunity for them. It's not a threat.
I know you said that if you had a crystal ball, you'd probably be, well, I'm paraphrasing, but you'd probably be on an island at the moment and not on stage with me here. But in terms of just looking ahead, when we're having these conversations and we are investing in a more sustainable future, in 5 to 10 years' time, how confident are you that the world is going to look incredibly different?
Oh, yeah, definitely. I mean, Ukraine-Russia war, tragedy.
Yeah.
No two ways about it. But we've seen, the need for energy, coal plants being refired up. It's regressive in the short term. But it's such a call to action, because what happens is new technologies are expensive. Because of energy prices going up, we're now in a position to invest in new technology. And as you invest in new technology, and it becomes more ubiquitous, the price of that solution goes down. So I'm expecting actually positive outcomes as we look forward.
All right, I think if we have a look, if there's any more audience questions, but we're 40 seconds away from time, and I do like to pride myself on finishing panels on time. Well, that's a good one there, just a quick one. The world slowed down in 2020. It was good for E. Is that the only viable solution?
No, I think we can build back better. I mean, you don't have to stop trading. We don't have to go back to Stone Age to look after our environment. We embrace new technology. We drive with new technology. I mean, getting back to the last point I just made.
All right, great to have you with us.
It's a pleasure. Thank you, everyone.